New York Stock Exchange gap opened down. $4 on that BTH. Petro China that had the big rally. We got the fund managers in it getting whacked right there on the gap down. Over bloated CMG that were short down. Going to go up, hit, and reverse and go down and continue its move. The bellwether IBM lovers of the world who don't know how to sell at the highs. Remember, everybody, that the re-leveraging process and all the gimmicks that have happened have a day of reckoning. And the thing of it is, these earnings yields as we move forward are not going to be sustainable without more people working. This is a big gap down on the NYSE. Once again, every morning in pre-market is to understand where that trade management's going to be. Cleveland Cliffs, the good ones in here will hit bottoms. And once the storm clears, then some of the same leaders that have been in the trading ranges, the Caterpillars, the Cleveland Cliffs, the VMWs, the CRMs, the IBMs of the world, the good quality leadership of the world, the EOG down $1.11. This is where that big money likes to park itself for a yield. That's a different story. What I will tell you is that 60% of the program trading happens right here. So on this left elbow gap down, like the Potashes, like the Deere, DE, the Caterpillar, once them sellers are out of the way, and we come down to the lower price levels, there will be entries there. BTU Energy down $1.47. The CEO down $1.62. Precision Cast Parts down $1.54. BHP Hilton, as they took the last week of the Memorial Week to bid them up and buy and hold them. Well, go ahead and hold the loser. Anybody to get ahead of that number, as far as I was concerned, was totally in left field. RIO down. That's the gap open down list. Look at the length of it. Look at the leaderships that are in here. There's that DEO. So where all of that buying was coming in on the last reversals, they came in. Now they get a chance to cost average down some more. Oh, sounds like a winning formula to me. Yeah, right. Wholesale is winning. On the gap open list on the NYSE, you got this is bucking the trend. It's probably an earnings report or CASC. Okay? But your gap up list on the NYSE, you have two qualifiers, and the gap open down on the NYSE, where program electronic trading will be done by institutional people. OXY, that had rallied up off the bottoms, was a month ago that we were shorting that thing all the way down. The summer price volatility that we said is here to stay. Both long and short volatility will increase and stay elevated through the calendar year of 211. And that will be the analysis. And remember, people, the thing about it is everybody wants to talk about it after the fact. That doesn't do you any good, nor will it ever be a healthy thing in your life. It's all about knowing why before, and it's all about having scenario plans set up. It's all about having the right data places in play. It's all about having the systems in play, risk systems, all kinds of various systems that we've developed is what keeps us sound, and it keeps us well diversified. We will have a little bit of a washout. Once the sellers clear out of the way, there will be a long trade off the bottom. Don't look for it to be like it would normally be on other gap down in pre-market futures, because we're going to see that on that gap down, part of that trade is, do those stop market orders get triggered, and or how about this beautiful little word? How about margin debt selling? How about the fact that there is very little open short interest, which means the less short interest on indexes and stocks, that means that stocks do not have strong support levels because there's no one there short to buy back. So when you don't have very little short interest, that means the bigger the short interest that you have, the bigger support levels that you get. Because why is that? Because people have to buy back the name. And the thing about it is, stocks go through those key levels in those markets because there isn't any short interest. Short interest is a good thing because it gives market support levels. When you're bloated at the top of markets, like we have been saying in all the sectors, indices, and everything else, is that they'll get to a point where they'll have a sell through there, which will support a short sell within the overall trade management structure on the NYSE. And why do they go down to a lower market before it gets made at a lower prices? Because that short interest isn't there to buy to cover. So therefore, as you learn, MMTs, how to trade knee-jerk reactions, whether it's an FOMC meeting, whether it's the monthly job reports today, you get great gap ups and you get big gap downs, and the earnings season and after hours has the same kind of knee-jerk reaction on an individual equity when they miss them, and we're going into that July quarter. And the price volatility is where the public can't decipher, well, what is real? The only thing I can tell you is when they see them go up, they get triggered in, and then they get slammed in the volatility on a headline number. So we're going to see where them shorts are. And this is a huge gap down list on the NYSE. Let's get ready to rumble. But the thing about it is, folks, is that at that lower support level, because there is little short interest to cover, they're very vulnerable. So understanding why they have stronger support or weaker support levels is the key. And most people don't know how to define it. Trade management.